Hello and welcome. If you're listening, chances are you're thinking about a Gold IRA rollover, maybe looking to add some stability, diversification to your retirement plan.
Exactly. It's a big step. And what we're talking about is basically moving funds from, say, your regular IRA or 401k into a special IRA that holds actual physical gold or other precious metals.
Right. And today we want to really dive deep into the costs involved because, let's face it, fees matter.
They absolutely do.
Yeah.
And for this, we're leaning on some great insights from Doug Young. He's got a lot of experience in finance and precious metals. Our mission today is to unpack those costs so you can make a smart choice.
Perfect. Because the idea of gold is attractive, but you need to know the real price tag, right?
Absolutely. Doug Young's work points to 5 main types of costs you'll likely run into.
Okay, 5 types. Let's list them out.
So you got your setup fees, that's the initial cost, then annual maintenance fees, storage fees for the physical metal, transaction fees for buying and selling,
Okay.
and finally, buyback fees if you sell back to the provider.
Got it. Setup, maintenance, storage, transaction, buyback. Let's tackle setup fees first. What are we looking at there?
Well, these are the one-off charges just to get the account established. Doug Young mentions they typically fall somewhere between, say, $50 and $300.
50 to 300 bucks just to open the account. What goes into that cost?
It's mostly the admin work, setting up the account, processing the initial paperwork, getting everything legally squared away.
Okay, makes sense. And does that price vary much between companies?
Yeah, it can. Some providers might have a flat fee. Others might waive it if you're investing a larger amount, maybe over a certain threshold. It's definitely something to ask about up front.
Good tip. So always ask for the details on that setup fee. What comes after setup? The annual costs.
That's right. Annual maintenance fees. These are for the ongoing management of your account.
And what kind of range are we talking for those?
According to Young, usually between $75 and $300 per year.
Okay. Similar range to the setup fee, but this one hits every year. What services does that cover?
It's things like account servicing, keeping all the records straight, tracking your holdings, and also handling the required IRS reporting.
Right, the necessary admin to keep it compliant.
Exactly. And something Young points out is how they structure this fee. Some might use a sliding scale based on how much is in your account, while others charge a simple flat fee each year.
Is one better than the other?
Well, Young suggests that a flat fee is generally preferable for the long term. If your account value grows, a sliding scale fee could end up costing you more down the line. A flat fee gives you cost certainty.
That's a really good point, something to look out for. Okay, so maintenance is covered. Now, the unique part of a gold IRA is the actual gold. Where does it go and what does that cost?
Ah, yes, storage. Since it's physical metal, the IRS says it has to be stored in an approved depository. You can't just keep it at home.
Right, no gold bars under the mattress.
Definitely not for an IRA.
Mm.
So you pay storage fees for this secure vaulting. Young puts these typically between $100 and $300 a year.
Another annual fee. Does the cost depend on how much gold you have?
It can, yes.
Yeah.
But another big factor is the type of storage you choose.
Type of storage.
Yeah. There are 2 main kinds, segregated and non-segregated, sometimes called commingled.
Okay, what's the difference?
Segregated means your specific coins or bars are kept separate, identifiable as yours alone. Non-segregated means your gold is pooled with other investors' identical assets.
And I'm guessing segregated costs more?
Generally, yes.
Yeah.
You pay a premium for having your specific assets earmarked. Non-segregated is usually the more budget-friendly option.
Okay, so that's a decision point cost versus having your exact gold set aside. Interesting. What's next on the fee list?
Transaction fees. These pop up whenever you buy or sell gold within your IRA.
Like trading fees.
Kinda, yeah. And Doug Young notes these can vary quite a bit. Some companies might charge a flat fee per trade, maybe like $40.
Oh.
Others might charge a percentage of the transaction value, say 1%.
Wow, 1% could add up quickly on larger trades.
It certainly could. That's why it's really crucial to understand how these fees work before you start trading, especially if you plan on being active.
Definitely something to clarify up front. Okay, that leaves one more fee type you mentioned. Buyback fees.
Right. This applies if, down the road, you decide to sell your gold and you sell it back to the same company you bought it from.
So the cost of them buying it back from you.
Essentially, yes.
Yeah.
Many providers offer a buyback program for convenience, but they might charge a fee for this service. Young says this can range from a small percentage up to, well, potentially higher rates, depending on market conditions and their specific policy.
Is this common? Do most charge a buyback fee?
Policies vary, It's something Young advises asking about right at the start when you're choosing a provider. Think about your exit strategy from day one. You know, understand the potential costs when it's time to liquidate.
Good advice. Okay, we've broken down the five main fees, but let's talk about the big picture. How much do all these costs actually impact your investment?
Yeah, this is where it gets real. Doug Young uses an example. Imagine a $10,000 initial investment.
Okay.
If you pay, say, a $300 setup fee, $200 for annual maintenance, and $150 for annual storage, well, that's $650 in fees just in the first year.
Wow, that's 6.5% of your initial investment gone in fees right away.
Exactly. It really highlights how these seemingly small fees can add up to a significant chunk, especially early on.
And it's not just the first year, is it? The annual fees keep coming.
Precisely. And that's Young's other major point, the long-term erosion. Those annual fees year after year, they eat into your returns and dampen the power of compounding.
Can you illustrate that, like over many years?
Sure, let's take a hypothetical $50,000 Gold IRA. If your combined annual maintenance and storage fees are $500, that's 1% of the investment value.
Okay, 1% per year.
Over 20 years, that constant 1% drag means your final account balance could be significantly lower compared to an investment with minimal or no annual fees. It really underlines why keeping ongoing costs low is so important.
That makes sense. It prompts the question, how do these gold IRA fees compare to, say, a regular traditional IRA?
Ah, good comparison. Doug Young points out that traditional IRAs, the ones holding stocks, bonds, mutual funds, generally have lower fees,
Why is that?
primarily because they don't involve the costs of physically storing and insuring assets like gold bars or coins. There's no need for specialized depositories.
So what's a typical difference?
Well, Young gives an example. A traditional IRA might have just a $50 annual maintenance fee and obviously zero storage costs.
Yeah.
Compare that to a gold IRA, which might easily hit $200 for maintenance, plus $150 for storage is $350 a year versus $50.
That's a pretty stark difference, something you definitely need to weigh against the reasons you want gold in the first place.
Absolutely. It's a key part of the decision-making process.
Okay, so knowing all this about the costs, what can listeners actually do to manage or minimize these fees? Are there strategies?
Yes, definitely. And Doug Young offers some practical tips. First off, believe it or not, negotiation is sometimes possible,
Really? You can haggle over IRA fees.
especially with larger investments. Young suggests asking for a clear, itemized breakdown of all fees first. Then, see if there's any wiggle room, perhaps leveraging the size of your investment. Also, always ask about current promotions or discounts.
Interesting. So don't just accept the first quote. What else?
Transparency is huge. Choose a provider that is completely upfront about their fee structure. No hidden charges, no surprises.
How do you gauge transparency?
Ask for a detailed fee schedule in writing. Check online reviews, see what other customers say about unexpected fees. If a company seems cagey about costs, that's a big red flag.
Right. Avoid companies that aren't crystal clear. You mentioned promotions earlier.
Yes, actively look for them. Young notes that providers often run specials. Maybe they'll waive the setup fee, offer discounted annual fees for the first year, or cut storage costs.
Are these usually tied to anything?
Often, yes. Like Young gives an example. A provider might waive the setup fee if you invest a minimum amount, say $25,000 or $50,000. Doing your homework and comparing these offers can lead to real savings. Just read the fine print.
Good point. So research promotions, look for transparency, and don't be afraid to ask about negotiating. Anything else?
Just reiterating the need to evaluate the total cost picture. Don't get fixated on just the setup fee or just the storage cost. Consider everything, transaction fees, buyback fees, to understand the true long-term cost and find the best overall value.
That makes perfect sense. This naturally leads to the big decision choosing the right gold IRA company. What should people look for beyond just the fees?
Doug Young emphasizes two critical factors here. First is reputation and service.
Makes sense. You're trusting them with your retirement savings.
Exactly. Look into the company's history. How long have they been around? Read reviews, check their rating with the Better Business Bureau. Good customer service can be invaluable if issues arise.
So track record matters. What's the second factor?
We've touched on it, but it bears repeating. Transparency and clarity in fees. A reputable company won't hide costs. They'll provide a clear, comprehensive schedule of all potential charges.
What should someone expect from a truly transparent provider?
You should get a document that clearly lists setup fees, annual maintenance, storage costs, including segregated versus non-segregated options, transaction fees, and any buyback policies or fees. No ambiguity. This allows you to accurately forecast your long-term costs.
Okay. Reputation and transparency, key pillars alongside the actual fee amounts. This has been incredibly insightful. If we had to boil it down, what's the main takeaway for someone considering a gold IRA rollover?
I think the core message is this. A Gold IRA can be a useful part of a diversified retirement strategy, potentially offering a hedge against inflation or market volatility. However,
There's always however.
However, fully understanding and actively managing the associated costs is absolutely essential if you want to maximize your returns and protect your financial future. Don't let fees silently eat away at your savings.
So do your homework on the costs. Don't just focus on the allure of gold itself.
Precisely. Know all the potential fees, use strategies to minimize them, negotiate, pick transparent providers, look for promotions, and make choices that align with your long-term financial goals.
And maybe a final thought for our listeners as they weigh their options.
Yeah, something to mull over. When you're comparing companies, don't just look at the bottom line fees today. Consider the long-term value.
Right.
Is the company reputable? Do they offer good support? Sometimes the absolute rock bottom cheapest option isn't necessarily the best partner for securing your retirement over decades. Think beyond just the initial price tag.
That's a great point. Look at the overall value proposition, not just the upfront cost. And for anyone wanting to dig deeper, Doug Young's analysis is a valuable resource.
Definitely worth checking out if you're serious about this.
Thank you so much for breaking all that down for us. Really helpful.
My pleasure. It's an important topic.
And thanks to all of you for tuning into this deep dive. We'll catch you next time.